Hello guys, welcome back to the channel. And today the last time we predicted USDJPY, we predicted GBP NZD, we called out what else, we had talked about BTC selling, but BTC has reached a critical point and we are waiting for it to first decide where it wants to go before we can actually sell it. This is, where is BTC? This is BTC. This is BTC. BTC has reached a critical point, so we are waiting for it to decide where it wants to go before we can actually sell it. BTC, it is retesting this support here, so we are waiting for BTC to decide where it wants to go before we can actually sell it. Now on the screen we have NzdCad. Why did I choose NzdCad? It's because I wanted to show you that this strategy works on all the assets that you would choose to trade. I know some people would want to trade only the majors, which is okay because it is a good thing to do, especially if you're a beginner. They have a lot of liquidity, many people trade them, which means the support you see on Euro USD, that is likely to be a strong support or resistance because almost everyone is trading it, everyone is seeing it, so it is a good support or resistance for beginners. But the strategy works on all assets. So on the screen I have NzdCad, and NzdCad, this is the weekly time frame. I told you it's the top down analysis. So weekly time frame, we are going to be breaking it down and show you a buy that we took on NzdCad that gave us almost 100 plus pips. Yeah, so we are going to go straight into NzdCad. So before I start, you guys can subscribe. I'll give you 5 seconds. You subscribe to the channel and then we continue. Okay, I hope that we have subscribed to the channel. If you have not, kindly subscribe because it boosts our numbers. So now before we start, or if we can start directly, look at the first thing we do, we plot our key levels. Plotting the key levels is one of the easiest thing to do. Why do I say it is one of the easiest thing to do? Because you just look at points where price action turned around many times. Where price action turned around many times, that means that is a key price level that whenever buyers or sellers reach that point, they are not willing to go any further. Rather, they are willing to go to the opposite direction. For example, you can see this price level here. Price came here, it had a lot of rejections. This is 1 2 3 4 5 6, that is around 6 weeks, 1 month and 2 weeks of price action, and then finally broke down. When they broke down, they still came back. They broke down a little bit and came back. Wow, this move, if anyone captured this move, they are the real kings. So after it came back here, dropped, rejected again, tried to go past it, rejected, came back, stood on it, rejected, went up. So now price has moved all this long and has come back to this area. What are we expecting with this strategy, guys? I told you it is very simple. Whenever price comes back to a previous area that it has been bouncing or buying and selling from, chances are high it is going to do what it has been doing there. At least 85% it's going to be doing what it has been doing there before. It is not just going to go and pass through and then proceeds down. No, sometimes it does, because with the market you cannot 100% predict what is going to be doing, but you have to anticipate that since it has been buying from here, treat these charts as though it is a real market where you have buyers and sellers. So here the buyers say that whenever the sellers reach price here, the buyers are interested, they come in and buy in massively. So whenever price comes back again, the buyers come in very aggressively and buy massively because they think like this is their discounted price, and whenever it comes back they enter and buy massively because you see now this buying pressure here. See this buying pressure here. This is when price came here, they bought for 2 weeks, 3 weeks consecutive. They bought here, bought. Then the seller said, you're taking us far. They brought them back. When they came in again, yeah. They brought with all their lives. They bought here, bought until when they push price up here. So we expect that when the price comes back again here, the buyers are going to come in and buy massively like they bought here. That is our expectation. However, we can be wrong, and when we are wrong, where do we get out from? This is where we get out from the previous price level where the sellers pushed maximally. The last point the sellers reached. This is where we get out from when we are wrong. Okay, so now let's proceed. So we expect that when the price comes here, the buyers are going to come in and buy aggressively like they have been doing. Same thing with the sellers. Whenever the buyers came in with a lot of happiness and push price up here, the sellers came in and said, nope, we are not going beyond that. Yes, we've been giving you that price, but now we are not interested anymore. What are we doing? We are sending the price down. The buyer said, we still want to push it up. The sellers came in and said, they came in with a lot of energy and pushed price up to here. They bought for 3 weeks consecutive. But after buying for 3 weeks consecutive, you look at this selling momentum here. This is a candle with no wicks. It simply signifies like high momentum of the sellers, and it is on the weekly time frame. You can best believe this was a huge sale on the weekly time frame. If I can measure the number of pips in this candle from where it began up to here, it is 157 pips in one candle. 157 pips. I think you can see the strength of the sellers. So the buyer said, no, you're not taking us far. They pushed the price back to the same price level. The sellers came in, pushed the price even beyond where they had stopped. Now here they even sold the whole month up to down here. The buyers came in and said, no, you guys, you're playing with us. They pushed the price back up to up here, even reaching this price level. The sellers said, no, that is enough. The moment, it's like this is a turning point. The moment we are reaching this price level here, the moment we reach this price level, the sellers come in and say, no, they push price back. Guys, I told you, the market is simply, forex market is simply a battle between the buyers and sellers, the sellers. So when they push the price up to here, the sellers again came in, the buyers again came in and said, you guys, I think you're playing with us. They pushed price to pass this price action at price level. Sellers tried to come in, but they were weak this time. They were weak. So when after failing, the buyers pushed up to this previous price level here. You see it? This is also another turning point. So when they reached here, you see, that's why I'm telling you, price moves from the previous price level to the previous price level. You see, this was another turning point. When the buyers finally managed to push price, they could not go beyond this level. If you had bought, this would be a take profit. They reached here. After reaching here, the sellers said no. They came in very strongly with a bullish engulfing candle, engulfing the previous 2 weeks of buying price action. So after that, they reached this price level again. The buyers tried to come in to push price back here, but they failed. The sellers said no. Now the sellers pushed them down, and they have even broken the previous low that they had reached, which means there is more selling pressure. So we expect this price action to reach down here. So guys, how hard is that? Just subscribe to the channel. I'm going to make sure I produce these videos every day until when you could master trading. So now we proceed. What are we going to do? We're going to put a line here, the previous where the sellers last reached. That is going to be our stop loss if we reach on the entries. So now we are done there. Where are we going? We have known that price wants to come here, and we know what we are going to do when price comes here. That is the best thing about the strategy. You know where price wants to go, and you know what you want to do when price gets there. Okay, so now we drop down to the daily. We drop down to daily and wait for price to come and hit our, where is it? Yes, for price to come and hit our area of interest. I know some people would want to buy here because it looks like a turning point, but guys, on the weekly it was not looking like that. On the weekly it was not looking like that. If you buy here, chances are high you might be stopped out. Yes, we've bought here before. We've bought here before and it has gone up, but not significantly. So we are on the daily now. We come to wait for price to reach our area. So we play price, good. Should we use that? Oh no, that is not significant. I think we'll wait. Good. Now that price has reached our price level, this is now the right time to do what? To enter into this trade. How do we enter? Do we just enter there? No. We go to the 4-hour and see if this rejection created any buying pressure at that area. And indeed it is there. You see, it is a buying pressure. Some people would wait for something like it is called what, for divergence on the RSI. Even me, sometimes I wait for that as an entry trigger, but this one is just a clear case of a straightforward example that I'm trying to show you. So I'm going to enter for buy position the closure of this red candle here, and my stop loss is going to be below this line here that we marked on the weekly time frame. Let me show you. You see this line that we marked on the weekly time frame. Where do we get it? This is the previous current price action where the sellers push the price up to. So we don't expect the price to go beyond this. If it goes beyond this, that means we are almost changing the trend to come and meet this area level here, isn't it? Good. So now we'll go back to our daily where we're going to maintain our trade from. So now that we have anticipated that, why do we put our stop loss almost 70 pips? I told you this is where the previous current price action reached. So we don't expect price to reach here. It can retrace around here, but it's not going to hit our stop loss. That is what we are expecting. However, it can be hit. Now that we know that it can be hit, what happens? That is where we apply risk management, because sometimes we can be wrong. But with this strategy, you're not going to be wrong most of the times. Okay, so now we play price forward. You see, buying pressure comes in, more buying pressure, more buying pressure. Good. Now at that point is now when you move your stop loss to break even. Move your stop loss to break even, such that even when the trade does not go as anticipated, you're not losing anything. So you play price forward, it goes up. So now there you move the trade past break even with 20 pips. You move your trade past break even with 20 pips, and now let it play out the way it wants to play out, because now you're already safe. You have secured 20 pips. You're not in any drawdowns. Even when the trade does not work out, it will just come and hit the above 20 pips, and you'll be having your money. You've secured around 20 pips, you're good to go. But our aim is not to secure 20 pips. Our aim is to capture the long move, which goes up to where? Up to here. Sorry guys, we get our target from the weekly time frame, which goes up to, I think we can target here. Sometimes guys, you don't over exaggerate your potential winnings. Just put a take profit which is realistic. That is 200 pips. That is one is to it shows 21, but it's because we moved our stop loss to break even. So 260 pips that is a 1:4. A 1:4. So what you have to do here is just hold your trades and wait. Simple. Hold the trades and wait. So we play price forward, retraces, goes back, retraces, boom, it hit our take profit from here. So it can retrace, come back, but it did not even hit our break even. You see, our break even is here on this line. So it did not even hit our break even, retrace, and then went back, giving us our 200%, 256 gains on this trade. Guys, that is what we do. And even when you did not enter the trade from here, you waited for this retracement. When the price came at this price level here and you saw this rejection, you entered, because it is still the same support where price is buying from, or where the buyers are coming in from. You waited up to this area and then you entered up to here, and then you are in your profits there. Let me see whether the price proceeded up to up. Yes, whoa, it still went up to the previous. Guys, just learn how to mark this support and resistance very well. You're going to achieve things that you don't know in forex trading. You see, price went up to the previous high, and now we know what happens when we reach here on this resistance. What happens? We are likely to come down. Let me see if price. Guys, leave a comment there. Leave a comment there. You see, the moment we reached this level, we started coming down. So if you reached here, you would have put a sell order here and waited. Where is this? Put a sell order here, a few pips below, and then put the stop loss around 50 pips above where the last price action happened, that is 78 pips, and wait. Put there, then play price forward. Guys. 300. Guys, comment, share the video, like the video. That is all for today. Subscribe to the channel for more content like this. I promise you, if you keep yourself to this channel, you're going to be learning forex trading in the easiest ways possible. That is all, guys. Thank you for supporting the channel. Subscribe, share the video. Also, if you learned something, try to like the video. Bye.